What's going on, guys? It's GBP, baby. Welcome back to a weekly review and forecast. I hope everybody's doing well, and let's get straight into things. So we're going to start on dollar as per usual, and you'll see how dollar has started to trade into this weekly fair value gap that I've been drawing our attention to. What you'll find is that we have traded to the 50% level and then bounced off of it. As you can see here, we traded up to that and then came off it. But moving into the next week, I do anticipate this fair value gap to get filled completely. And the reason for that is because you can see that how price is drawing up to this bearish order block residing right here. So I am going to get that marked down as weekly bearish order block. And basically, with our bullish bias, I'm anticipating price to continue to draw up towards that, when I would then anticipate some kind of reaction or start to see a nice retracement start to form. However, until then, I continue to be bullish, and I'd like to think that we can trade into this. Now, what you'll find, I have also brought our attention last week to this order block. Now, this is a bearish order block on the weekly, and I have been talking a lot about this 50% level, and the reason for that is because when we trade through a bullish order block like we have this week, when we trade through a bearish order block like we have this week, this bearish order block should now act as a bullish order block, meaning that the mean threshold, which is the midpoint, should provide support. And this is important because it allows us to frame the lowest we anticipate price to go. Now, if you've been watching my videos, you'll know that last week I was stating how this level here, the midpoint, was the lowest I wanted price to go. And you'll see that this week we didn't even touch it. We didn't even trade near it. But that means that this level still remains relevant. So what I'm going to do is I'm going to get that midpoint drawn out, just so that we know that this is still the lowest I anticipate price to go, so long as we remain bullish. So I hope that makes sense. Let's get that marked out. I'm going to make it red, and I'm going to make it dashed. I'm going to get rid of this box. And I'm also going to state that this is a weekly inversion order block, I'm going to call it, because it's no longer acting as a bearish order block. It is now acting as a bullish order block. So we anticipate this order block to propel price. And where do we want it to propel us to? This weekly bearish order block that we have marked out. So that level's marked out like so. What you'll also find is that we have actually formed the fair value gap after this week's trading. I'd like to think that price can dip down into this during the manipulation of the week, maybe to create the low, and use this in order to again trade higher and start running towards that weekly bearish order block. So we're starting to see a few PD arrays that price is likely going to be referring to in order to propel price to the upside. Let's drop down to the daily and take a better look. So you'll see this fair value gap on the weekly lines up perfectly with that daily fair value gap, which I was drawing our attention to last week. Now, price didn't actually trade into it, or hasn't done it yet, and I've been anticipating price to trade into it all week. If you watch my videos this week, you know I was saying I'm looking at this. Nothing has changed. I am still looking at this fair value gap, but the fact that this is now a weekly and daily fair value gap suggests to me that price is even now more likely to use this as a point where we will be, seeing some kind of turnaround or some kind of reaction. So this remains significant. But again, this midpoint that I marked out, the weekly inversion order block mean threshold, let's just get mean threshold marked out, still remains relevant as a potential low of the week. Also, you'll find it lines up perfectly with the wick of this bullish order block. So yeah, my analysis is very similar to last week, but again, with CPI this week, PPI, retail sales, and all sorts of high impact news events, I am expecting a lot of volatility. So we might find that price comes down, finds support at this level, and then during CPI, or maybe towards the end of the week, we may be running up to this weekly bearish order block. But obviously we'll have to wait, see how Monday trades, see how Tuesday with CPI trades, and then start to frame the week whether we expect a Thursday reversal or things like that. So let's go up down to the 4 hour. And again, you can see the consolidation that we've kind of been in this week, but you can see we're engineering liquidity. This low, and even this low. These are all relative equal lows. So price is engineering in liquidity that's likely going to get grabbed in the new week. So what I'm going to do is I'm going to mark this out as sell side liquidity, and I'd like to see price dip down there in order to grab stops to then move higher. Because remember, in order to move in one direction, price has to go in the opposite direction. And what I mean by that is that in order for us to get from this point to this point, we need to move lower first. So I'm anticipating price to come down and dip into this sell side liquidity before moving in towards this weekly bearish order block. Again, this breaker, I've brought our attention to this before, guys. I would like to see price trade into it. Now, I'm not going to mark out the whole breaker, but what I am going to do is I'm going to put a level here which lines up again perfectly with that fair value gap. And this level is a breaker Y. We've got a low, we've got a high, we've got a lower low, and then price is broken higher. So when price comes back down into that range, what do we anticipate? A bullish reaction. So let's get that marked out, and we're going to write 4-hour breaker. 4-hour breaker high. So now we've got some discount PD arrays marked out. What have we got? We got the sell side liquidity below these lows. We have this weekly daily fair value gap. We have this 4-hour breaker high, and we have this level, which is the midpoint of that bearish now bullish order block on the weekly. So like I said, as price comes down here, we should be anticipating and looking for longs on dollar and thinking about looking for shorts on the pairs with an expectation to run for buy side liquidity resting above this swing high. So let's get this marked out. Buy side liquidity above there. So I hope that makes sense. Perfect. And yeah, let's go down to the 1 hour just to get a better look. Again, consolidation, sell side liquidity, breaker, right at the level that I was talking about, and obviously this fair value gap which we're anticipating to get filled before we start seeing some kind of expansion to the upside. Now, bear in mind, let's go back up to the daily very quickly. Although this is the weekly bearish order block here, we do still have this massive range on the daily. So although price may reach this bearish order block, I'm not expecting price to stop there. This is simply just a target on the way up. The highest price could trade, and very easily with the amount of news we have next week, is this daily bearish order block. So I'm going to get that marked out as well. And I'm going to make sure this states that it's a daily bearish order block, because again, price may want to be overzealous, especially with the amount of news we have, and reach up into these levels here, which could very well happen. So let's just get that delineated like so. And now we have two targets. We have our first buy side liquidity here, or well, three targets. We have our first buy side liquidity above Monday's high. Then we have our weekly bearish order block where we anticipate some kind of consolidation or retracement. And then we have this daily bearish order block in order to fill this huge range and liquidity void that we have going on here. So I hope that makes sense on dollar. Now let's go check out pound. So pound, again, very similar. If you've watched my recent video on the IPSA data ranges, you'll know that I was bringing our attention down to this liquidity fair value gap down here. We trade through that low. We also have a fair value gap down here at a high. So we may find support at this fair value gap. So we can drag that out as a potential draw on liquidity. Now this is quite a far target, but price could very well start reaching into that. But overall, I am anticipating pound to eventually trade down into this. We have some swing lows down here, which are creating sell side liquidity. So we'll get that delineated like so. And then of course we have these relative equal lows here. So this low, this low, and this low all create sell stops that I'm anticipating price to come and grab in the new week. Now let's drop down to the 4 hour and we'll be able to better frame price. And you'll see how price is engineering again. We're engineering buy side liquidity. Why? We've got a high here, we've got a high here, and we've got a high here. So this is all creating buy stops. So this is buy side liquidity that price is likely going to want to grab again before reversing into the downside. We also have a breaker. This is all things I've brought to our attention last week, by the way. But we also have a breaker, high, low, higher high. So we're looking at that last down close candle, and we want to drag that right out. And I'm anticipating price to want to turn around at this point. So again, as pound is trading into this breaker, I'd be expecting dollar to be trading down into its breaker, so into this level here. So I'm just letting you guys know. And again, this is a fair value gap from this low to this high. So as price trades into that, we'll be filling an imbalance, and then we are anticipating a reversal. Let's go down to the hourly and get a better look. Again, you can better see how they're engineering in this liquidity. Again, we might see some manipulation. So like Monday, we might move lower. I don't plan on trading this Monday purely because CPI is on the Tuesday. But let's say they leave that buy side liquidity intact. I'd anticipate that to be getting grabbed on the Tuesday. But it's literally just a matter of waiting and allowing Monday to trade so that we can start to think about setups. But overall, I do want to see price draw down into the sell side liquidity below here and potentially reach for this fair value gap, depending on how crazy next week gets. Now you're probably looking at this void thinking, okay, why isn't price going to trade back into this? It can do it, and it very well may. However, we've got to look at things like this. For example, we have an inversion fair value gap here, this massive inversion fair value gap. So price delivered on the upside here and then delivered on the downside, meaning that this should now provide resistance. So let's say price does trade through this buy side liquidity and reach up to here. This should act as inversion. So price should turn. This should turn price around at this point if it's going to continue bearishly. So although we have this massive imbalance, we are bearish overall, meaning that we shouldn't really anticipate price to be reaching all the way into these levels. It can do it, Don't get me wrong, but preferably I would like to think that it will not. So we'll see how price acts in the new week. Let's go to the 15 minutes, see if we can find anything. Again, these relative equal highs are looking beautiful. We have a nice little 15-minute fair value gap just above that breaker. So let's get that marked out on the 15-minute, because this might very well be where price wants to turn. And then, yeah, we'll just have to see and expect some kind of break in market structure. What I'm waiting for, like I said, is for this buy side liquidity to get tagged, and then a break in market structure, and then I'll start looking for shorts with an expectation to run for, again, Monday's low and these relative equal lows that I marked out on the higher time frames. So that's everything on pound. Let's now jump into euro. So here's euro, and you'll know if you watch my IPTA data range video how euro is moving a little bit more weaker compared to pound. So euro managed to take out this low where pound didn't manage to do so. So you can see that low's been grabbed, but I am expecting quite a lot of selling to be happening on euro since it's the weaker pair right now. Now let's just get something marked out. We've got this fair value gap here that's now formed on the weekly. So what's price going to want to do? Price may want to trade into this to create the manipulation of the week, again offering a perfect fair value gap entry for potential shorts with an expectation to run to the downside. The highest I'd want price to trade on euro is definitely the midpoint of this wick. Now I'm not saying price is going to get up there, but if price overshoots this weekly fair value gap, then this is the highest I'd want it to go before, you know, I'd be concerned. So we've got a weekly fair value gap here, and then we have this level which is delineating the highest point that I'm expecting euro to trade if we are to remain bearish. Let's go to the daily, and you'll see that weekly fair value gap. Now this is an implied fair value gap on the daily. I'm not going to get into that right now, but we definitely know that this is a fair value gap, and there's a beautiful bearish order block right here. So we're going to mark out the open of this bearish order block because we anticipate a reaction away from this level. So we have that delineated like so. Again, price can overshoot it, and where can it overshoot to? 50% of the order block, which lines up with that weekly level I just marked out anyway. So it can trade up there, but I'd like to think that it will not. And then in terms of targeting for the downside, we have that sell side on the weekly. We'll go on the daily and mark it out. So we have these relative equal lows below here and here. So these are sell stops below here. And then we also have a daily fair value gap all the way down here that I did speak about in my IPTA data range videos. And like I said, this is a stretch. Price may not reach it, but again, with the amount of news that we have in this week, I wouldn't be surprised if price wanted to make its way all the way down there. So this is a possible reach as there's a fair value gap here. So we'll just get that marked out. And then there's also sell stops residing below this swing low. So we have a lot of targets on euro, and at least we have some upside as to where we'd be anticipated to start looking for shorts and such things. Let's go to the 4 hour. Again, you can see what we're seeing, relative equal highs here getting formed. Why? Because we're anticipating some kind of, you know, manipulation where we run out these stops in order to move lower. Again, similar to pound, we've got a breaker, high, low, higher high, price is broken lower. So we're looking at these down close candles as an area to start looking and anticipating selling. We also have an inversion fair value gap, a very strong one, and I'll show you that now. So you can see that this range, in fact, we can look at this one. So this range, it's a very small range, but this range has been traded through on the upside, downside, upside, downside. So again, price shouldn't, if price manages to trade through this level, it will then automatically provide support, and we can start looking for runs up to here and here. This is very unlikely to happen because we're bearish on the higher time frames. But what I'm saying is that this is what's helping me know, okay, we're likely bearish, because when price just creates things like this, inversion fair value gaps such as these should provide the resistance it needs in order to keep price propelling lower and, you know, staying away from these levels, because it acts as almost like a defense level. And you'll understand what I mean the more you look at fair value gaps. But again, look at this, delivery on the upside, delivery on the downside, and we're traded away. So when price returns back to this, we expect it to, again, turn price away. We don't want to see it trade through it. But yeah, let's go down to the 1 hour, see what we can find. Nothing much. Beautiful trades happening last week. Make sure to go check out my trading video. I'll link it in this video. But overall, I'd like to think that we can have a nice continuation. Maybe see some manipulation on the Tuesday before CPI, and then I'd like to start looking for some aggressive moves to the downside. We've got relative equal lows here again, reaching over all the way into here with a potential reach down into this level as well. So that's going to be everything, guys. I hope you found this insightful. This is going to be a big week, so make sure your risk Your risk is on point. And don't rush it. Again, like Monday, I'd just stay out of Monday purely because I can imagine it's just going to consolidate. And CPI, I wouldn't recommend trading CPI. You can always wait till after the move. But yeah, it's going to be an interesting week to say the least. Don't forget to smash that subscribe button. Don't forget to smash the like button. And I'll catch you tomorrow. Peace.